Is it running?
Mhm.
Okay. So certain accounts will be on the left side, certain accounts will be on the right side. Left side is debit, right side is credit. As we analyze our transactions, I'm going to ask you to ask some questions. What accounts are affected? What's their classification or category? And what categories have we had so far? Anything of value is called what? What categories have we had so far? Asset, liabilities, owner's equity, expenses, what else? Revenue, right? The I part, is it increased or decreased? So was that a plus or a minus? We did that in chapter 1 on that expanded accounting equation. Was it increased or decreased? Then the last part will be the D. Is that a debit or is that a credit? So the main thing you need to know is where the normal balance is for the account. We increase an account on the normal balance side and we decrease an account opposite the normal balance. Right? We increase an account on the normal balance side and we decrease an account opposite the normal balance. Here's the things that we're going to cover in the chapter. We're going to have a source document for every transaction that occurs in the business. That transaction is going to be recorded using the accounting equation under whatever specific account we have. The categories we said that we have so far are assets. What's an account under an asset? Give me the name of one. Cash. What was the other one? Equipment. Accounts receivable. Supplies. Building. I mean, there's just lots of different things under the assets. Different accounts are used for each subdivision in that accounting equation. We just did the assets. What are some examples of the liabilities? Accounts payable. What about the equity? No, expenses are a category all their own because we're going to use the expenses and the revenue. They fall under the equity part, but they have their own classification or category. This book calls it a category, I think, but other books will call it a classification. It's still the C for that mnemonic, ACFP. And then we have expenses. And what accounts would we have under expenses? Not prepaid rent. Rent.
Utility bills, current bills.
And it has the word expense on the end of it. Supplies expense, salaries expense, gasoline expense, utilities expense, miscellaneous expense if it doesn't fit anywhere else. And then revenue, and it always has that word expense after it. Supplies expense, right, it always has that word expense. The revenue depends on what kind of a company it is. What were some of the revenues and the problems that you did for homework? Legal fees. Typing. It's however that business is making its money. Right, one was a catering company. Okay, it was a typing, word processing revenue. It doesn't always have the word revenue in it, but it's how the company is generating money. If we were cutting the grass, if we had a lawn company, what could our revenue be called? Lawn services. And that would be our revenue account. So it depends on what kind of an account it is. The standard account, it's a way for us to record whether that account was increased or decreased. It helps us, just as you were doing the expanded accounting equation and we put all of the expenses together, when you did the income statement, you had to go back and see what expenses you used because we had everything under one. So when we use an account, we'll have the supplies expense, the salaries expense, the equipment expense, utilities expense. We'll have separate accounts for each one of those. And it helps us keep everything just in one place. For each one of our accounts, the formal account that includes columns for the date, the item, the post reference, and whether it was a debit or a credit. Let's see if there's a picture in that book that you can look at. If you look on, it's 41 in my book. So it would have to be close to 41. It's blue. Each account will have a separate form when we get ready to use those accounts. And we'll keep all of the transactions for that account in that specific account, that specific page. They're kept together. It looks sort of like a book when we put them all together. And each page will just have that one account. So we'll have all of our assets. And we said that could be prepaid rent, cash, equipment, supplies. There's a picture of what it looks like. You also have a picture in your book if you don't refer to the PowerPoint, but there's a place for the date. We don't always write something in the item column. There's a post reference column, so when we get ready to post, we'll have something there. And then we have a debit side and a credit side. Sometimes you don't have all of this. You might just have a debit column and a credit column. You wouldn't have an actual, all those other columns for the credit transaction. There's the left side, there's the right side as we're recording the transactions. All T accounts have this structure, and that's what we'll be using first to record our transactions. The left side is the debit side. The right side is the credit side. The T account is something that you can use forever in accounting. We'll use it to record our transactions in this chapter, but later on we won't use it for recording transactions. We'll just use the T account when it's a difficult transaction. My dad is a CPA, and when he's trying to record a really difficult transaction, and he doesn't record it, but somebody in his office does. So there's the cash account, there's the debit, there's the credit side. And he might have 4 other accounts that are involved in that transaction. And if you're making a correcting entry, sometimes you need to go back and use the T accounts. It just helps you or guides you in what you need to do to make those balances work. If you have a correcting entry, you might need to do the T accounts for what that original entry was, so you know how to fix it. So you'll always use the T accounts, but we won't use them always like we're going to do in chapter 2. For cash, where would the normal balance be? And that's the plus side, and that's the minus side. Last week, I told you that about 80 to 85% of our transactions involve cash. So if you get cash right, you have the other part of the transaction correct. So memorize cash. Where's the normal balance for cash? On the debit side. That's where we do a plus, and the credit would be a minus. So if you know this one, if we had another account involved in that transaction, and cash is the debit, what does the other account have to be? A credit. In double entry accounting, we have to have at least 2 accounts involved in a transaction, and we have to have a debit, and we have to have a credit. Now, the shift in assets, another one of our accounts would be accounts receivable. So if we were using both of those accounts, if we received cash as a payment for something that someone owes us, which is our accounts receivable, cash would be a plus, which is a debit, and accounts receivable, because they're paying on the amount that they owe us, it's going down, that's the credit. That's where the shift in assets come from. We have a debit on the asset side and a credit on the asset side. As we work through the transactions, we're going to ask ourselves those questions. What accounts are affected? What's its category? Is it an increase or decrease? And is that a debit or a credit? The procedure used to balance an account is the same for all accounts. This is only on the T accounts that we'll be doing this. What is it called when we added the 5,000 and the 600 together and added the 400 and the 500 together? From your reading, what's that called? Footings. Okay, footings. And we came up with a balance of $4,700 because we took the 5,600 and subtracted the 900 from it. We had more on the debit side than we did on the credit side, so we still have debits left.
And the balance always goes on a higher number?
Right, it's going to go on the higher side. And we'd want to, if, let's say, doesn't really tell us what account this is, but let's say this is our cash account. If our cash came out with a credit balance, what would that mean? Or we just, yes, we have a negative balance in our cash account. Sometimes you'll see that in an account. It depends on when that deposit was made into that cash account. It was made at the same time, but the credit part got recorded before the debit part. You might have a credit balance, but we don't want to have that, not for very long. Or we'll have an overdraft charge at the bank if we're talking about what's in our checking account. But you can see we've added the 5,000 and the 600. We added the right side, which was 900, and then we subtracted the 900 from the left side. We have debits left. Add the items, and then it just tells you what we just did. That's the footing. You'll see that on the test. And our ending balance is going to be the 4,700. We'll do that in chapter 2, and then we'll start recording things in a journal and in an account. Recording the transactions in the T accounts. This is from your book. It's example 2.1. If you look at that, it just tells us where the normal balance is. Assets are on the debit side, liabilities on the credit side, and then under owner's equity, and there you can see the category, owner's equity, and we have capital, withdrawals, revenue, and expenses. And that's where our normal balance is. What is the one that you should memorize today? Because it's involved in about 80 to 85% of your transactions. Cash. So we increase cash on the left side, the debit side. We decrease cash on the right side, the credit side. That one will get you through for a while, and then it'll start making some sense. Remember, we're playing the game. I'm giving you a few rules at a time. Some of you are thinking, oh, I never remember this. You will. I promise you will. Maybe not today, but we still have several more weeks to work on this, so you'll get it, I promise. But this is the foundation. need to know where the normal balance is, and that's where we increase an account. Several years ago, I had a lady in this class, the Intro to Accounting, and she wanted all of her papers to be in Excel. So she did all of her homework papers in Excel. Didn't turn things in on time because she was working so hard to get them perfect in Excel. As much as I talked to her about just do the work, paper, pencil, in the workbook, and turn it in so I can give you some feedback. No, she wanted to do it in Excel. So she spent a lot of time on her homework. We got to about probably chapter 5, and this is where you have the foundations. This really helps you as we go through each one of the chapters. And you won't hear me just say one time, we increase an account on the normal balance side, we decrease an account opposite the normal balance. About chapter 5, week 5, she said, if you had just told us that we needed to know where the normal balance was, I would have gotten it. I don't tell you just once, I repeat it. And I'll repeat it so many times that you'll say, okay, already, I get it. I know that. And I want you to be sick and tired of hearing me say that. But don't worry so much about doing things in Excel and making it look so pretty on your workbook pages. I just want it to be right. If you need to erase it and start again, or you need to draw your own form because you messed up that first form, do that. Just get the work into me so I can give you some feedback. If you don't get the feedback, then you don't know what you're doing incorrectly or correctly. So you'll hear me say over and over again, we increase an account on the normal balance side, we decrease an account opposite the normal balance. So what do we need to know for our accounts? Where the normal balance is. That's what we need to know. We already mastered whether it was an increase or a decrease in chapter 1. We looked at the transactions and we said whether it increased or whether it decreased. This is in your book, table 2.1. And you can use that as you do your homework for chapter 2. The rules of the debits and credits, here they have where the normal balance is with that plus, and the minus is where we're decreasing. The ones that might give you a little trouble might be the withdrawal, the revenue, and the expenses. Cash has a normal balance on the left side, liabilities a normal balance on the right side. Capital has a normal balance on the credit side, withdrawals have a normal balance on the left side. The withdrawals, what kind of an account is withdrawals? Does anybody remember from chapter 1? Contra capital. Okay, it's a contra capital account. It has the balance opposite the account that goes with it. Capital has a normal balance on the credit side. Withdrawals have a normal balance on the debit side. Revenue has a normal balance on the credit side. Expenses have a normal balance on the debit side. And if you'll think about what happens with the capital account with the normal balance on the credit side, revenue does what to capital? Increase it or decrease it? Revenue takes it up, takes capital up. Expenses does what to capital? Brings it down. So those balances, revenue and expenses, work with the capital account. Those are probably the ones that will just give you a little bit of trouble. We know what the accounting equation is, assets equals liabilities plus owner's equity, and that tells you where the normal balance is for those three accounts. As we're working through the transactions, we have to have a debit and a credit. You can have multiple accounts when we get into the payroll, or let's say the owner is investing equipment and cash in the business. We have two entries for the assets, cash and equipment, and then one entry for the capital. So we could have more than two, but we have to have at least two. And you have to have a debit and credit. Each one of your transactions should equal. So you want to add those up and make sure that your amounts are the same. As we're working through each one of our problems, most of them will give you a chart of accounts. The chart of accounts tells you the account number, the category, and the name of that account. As you're working on your transactions, I want you to use those specific names. Our revenue is going to be legal fees. Our expenses, we have salaries expense, rent expense, advertising expense, and meal long, comma, capital is our capital account. Meal long, comma, withdrawal is our contra capital account. So we have the category or the classification here. We have the account numbers. Assets start with what number? In this book, they start with 1. So it could be 1,000, it could be 100, it could be 10,000. It just needs to start with a 1 in our book. And assets are not listed in alphabetic order. They're listed in order of liquidity. How quickly can we turn these into cash? So we usually have cash. Petty cash is usually our next one. Accounts receivable is our next account. Now, whoever did this chart of accounts didn't leave any space in there to put petty cash, did they? And it's the second one. So when you're creating a company, you want to leave several numbers in between these account numbers so that you can add another account in there. Here we have to put petty cash down here. And they're in order of liquidity. How quickly can you turn them into cash? I worked as a secretary at a hardware store, it seems like 100 years ago. And accounts receivable, the owner of the company had to go and collect accounts receivable before we could get paid. He was that short on cash. So he would go visit his customers and collect balances from them so that we could make the payroll on Friday. That's scary. But there are a lot of businesses that operate that way. So we can turn this into cash quickly. Petty cash, it's sitting in somebody's drawer as a petty cash account, petty cash fund. So that is immediate cash. Office equipment, we might have a harder time selling that, but we could generate some income if we needed to. We had to pay some bills. All right, our liabilities start with 200, our capital are 300s, revenues are 400, and expenses in this book start with 5. Now that's not always going to be the same with all of your companies. But in this intro class, it will. Balance sheet accounts, what goes on the balance sheet? What's the acronym? Balance sheet. They're permanent. ALO or AL, assets, liability, proprietorship. You'll thank me one of these days when you're taking the test and you can't remember what goes on the financial statements. What goes on the income statement? ICE accounts, income, cost, and expense. No cost yet, but income and expense. They're temporary. We're going to close these eventually. Use the mnemonic so you'll remember. Any type of hint that helps you recall what goes on those statements will be very beneficial, especially when you're nervous about the test. Andrew, do you have a question?
Any particular rhyme or reason when it comes to numbering the accounts in other categories like the liabilities or revenue that's similar to how the assets are typically numbered?
I would leave some numbers in between there. In this book, accounts receivable and accounts payable, they'll both have a subsidiary ledger eventually, and we don't use account numbers in the subsidiary ledger in this book. Usually all of the accounts receivable, which would be our customers, they would have an account number too. This book doesn't use account numbers, and I don't know why. So this will be our controlling account for accounts receivable, and then the 211, the accounts payable will be the controlling account for that subsidiary ledger. So all of our vendors will be listed under accounts payable, and they don't have account numbers. When we do our 2 Peachtree exercises, you'll see how it automatically numbers them. You can select, use the chart of accounts that's already prepared. Chart of accounts just gives you, it gives you a guide for the account name, which needs to be just like that, and the account number. In our working papers, a lot of the working papers, the publishers have already put all that information in your problems. But if you were opening up a ledger account for those accounts, you put the name and the number. They already do it for you. And I already do it for you on the test. That part I do. We just don't practice that, setting up those accounts. Years ago, my dad was doing the accounting for a hospital in the town where I grew up in West Virginia. And in this little town where I grew up, there were a lot of people that had the last name Morgan. And when they were creating patient accounts and they were looking at their printouts, they ran out of account numbers for the ends. So they had to start an extension. .1, .2, .3, because they just didn't allow enough account numbers. And it happens here too. I noticed last semester in one of my accounting classes, I didn't have anybody's name that started with A, B, C, D, E, or F. G was the first letter of the first person in my class. So if I had created, I don't know, let's say 5,000 accounts for A, B, C, D, E, F, and I didn't create enough for G, I'd be adding an extension because I had G on as most of my students. Did you have another question?
Actually, funny enough, you can see this in practice, just at any pharmacy in certain areas of town, there'll be an entire bin for just Gonzalez
Yes.
in the drug pickups.
And it just depends on what area you're in. In other parts of West Virginia, there probably weren't that many M's, but there were just a lot of families who had the last name Morgan. So they needed probably account numbers just for that, or if they ran out. And who can predict that? I don't know that you can. In the year 2000, when we wrote our programs that made our computers run, who would have thought that we would have run out of numbers for 19, because some of our programs were written with that 19 already in the program. You don't think that far ahead. And then we got to the year 2000, they were so afraid that everything was going to crash. Some things did, but not like they were predicting. So if you're setting up a new business, maybe look in the phone book, if you still get a paper phone book, to see where the majority of the last names come from. That might give you an indication. I don't think we could always predict things, though. I just would leave enough numbers in between here that I could add something else. Because there's no place to add petty cash right now. The 5 steps to analyze the transaction. This is what the book tells you to do. I gave you the acid. It's the same thing. ACID. The only thing that I don't have down here is what does the T account look like? What accounts are affected? What's its category or classification? Is it increased or decreased? Is that a debit or credit? And then what does the T account look like? That's step 5 in the book. This is easier to remember, isn't it? This is in your PowerPoint. I think it's in the student PowerPoint, is it? Go to the next slide, because I edited mine a little bit. It might not be in there. Okay. So if you'll just write that down. What accounts are affected? What's the category or classification? Increase or decrease, debit or credit? And I think yours goes right to this slide. And that's just another way of putting it. I don't know. Maybe. maybe. Probably not from this. And I won't just say it once, we'll do it for each one of our transactions. And then you're going to say, okay, I get it. I know that we ask those questions. Because some of them will become easy. If it involves cash, it's going to be easy. You're not going to have to ask yourselves those questions.
And then the T was, what is the?
What's the T account look like? Or T accounts look like? And I just put up there, don't go through what's happening in the transaction unless you ask yourself those questions. And then eventually you won't have to ask those questions. Let's look at this first transaction, August 28th. Mia Wong invests $6,000 cash and $200 of office equipment in the business. What accounts are affected? Cash,
Capital.
office equipment, and Mia Wong, capital. Right? The C, what's the category? Cash is what?
Assets.
An asset. Mia Wong, capital. It's a capital account, owner's equity, and then office equipment. What's it? An asset. Right, so there's cash, there's office equipment, and there's Mia Wong, there's their category. You'll have some forms like this in your exercises, I think, not in your problems. Did it go up or down? That's step 3. Cash, did it go up or down? Up. Office equipment? Up. Capital? Up. Now the next part is we have to know where its normal balance is. Cash and office equipment, their normal balance is where? On the debit side. And they're both going up, so those are our debits. Mia Wong Capital, its normal balance is where? On the credit side. And you might need to look at that table for a while to see where the normal balances are. But we can also apply that accounting equation. Assets equals liabilities plus owner's equity. And you can see for A, we have cash, office equipment, and Mia Wong Capital. And we're recording them in the T account, and we're putting the A in parentheses because that was transaction A. When we get to B, we'll put B in parentheses. Now, we're not always going to do our transactions this way, but for chapter 2, we will. All right, baby steps. A transaction that involves more than one debit or more than one credit, that is called a compound entry. The example is the one that we just did. And we are using double entry accounting. We have a debit, we have a credit, and they both equal. Let's look at transaction B, August 29th. Law practice bought office equipment for cash. The A part, what accounts are affected?
Office equipment. Cash.
Office equipment and cash. So with cash, when cash is involved, I'll leave that up there. That's the questions we're asking. We bought office equipment. Did we increase or decrease cash?
Decrease.
Decreased. Bought. Paid. Wrote a check. Right? Those are just words that are going to go with decreasing cash. What are some of the words that will go with increasing cash? Collected, received. Okay. Customer paid. Now the word paid is in there, but the customer paid the amount that was due. customer, we're receiving cash, okay? If we're paying something, that's going to be the credit. So when we look at this one, where's cash going to be?
Credit side.
Cash is going to be the credit. What does the office equipment have to be?
Debit.
The debit. Now, do you see how we didn't really have to ask ourselves these questions? What accounts are affected? What's the category or classification, increase or decrease, debit or credit? We knew cash. What is this transaction called? Shift in assets. Cash, everything happened on the left side of the accounting equation. But this is just the second transaction we've done, and we didn't have to ask ourselves these questions. Now, when you're doing your homework, you still might have to ask yourselves what accounts are affected, what's the category, increased or decreased, debit or credit. You might want to write it down as you're working through them. Okay? So let's look at this one. We have office equipment and cash. They're both assets. Cash went down. Office equipment went up. Cash was our credit. Office equipment was our debit. Shift in assets. The T account is number 5 over there, and you can see the transaction. We already had something in office equipment. So what's our balance now in office equipment? 700. Now remember, we won't always do the transactions in the T accounts. Your T accounts get really messy looking because you're going to have lots of transactions. Notice how we labeled it B, and in cash we put the B with the $500 on the credit side. So those transactions match up, those two accounts. Let's look at C. Bought more office equipment on account. What accounts are affected?
Accounts payable and
Accounts payable
office equipment.
and office equipment, right? We might have to ask ourselves the categories. What is it? What's office equipment? An asset. Now, can we go to the cash and just put office equipment up here to say, if we bought office equipment and it's an asset, was that a debit or a credit? What was that if we're increasing office equipment?
Debit.
Office equipment was the debit. So I'm almost skipping this step because we could just change this name up here to office equipment. It's an asset. We could have changed this to just be, now that's not the name of an account, that's the name of a category, but that could help you be a little faster with your transactions. You don't want to spend 10 minutes on each transaction. All right, we want to get a little faster with it. So come up with some hints that will help you work through that. The other account that was affected, accounts payable. Now that's a liability account. Do we remember where its normal balance is? Some of you might not remember, but if we know office equipment is the debit, what does accounts payable have to be? The credit. You see how we have to have a debit, we have to have a credit. Maybe we can skip some of these steps and go right to the T account. Questions yet? It'll get easier, I promise. And I might see some puzzled looks right now, but it will get easier and you'll say, I get it now. I really get it. Let's look at the transaction. Office equipment's getting a little busy up there with A, B, and C in there. To know what the balance is in office equipment, we'd have to add that up. Later on, when we start using the ledger account for office equipment, we'll know immediately what the balance is because we'll calculate the balance every time we put a transaction in there. Right now, we'd have to foot it to see what the balance is. Transaction D, provided legal services for cash, $2,000. What accounts are affected? Cash and our revenue account. And we'd have to go back to the chart of accounts to see what that account was called. Legal fees, I think is what it was called. Cash is involved. Did cash go up or down? Provided legal services for cash, it went up. Cash is a debit or a credit? The debit. What's the other account have to be?
Credit.
The credit. Did we have to ask ourselves all four of those questions? How many transactions have we had so far with cash? We've had 4 transactions. 3 of them have had cash, haven't they? So that's already 75% that we could get correct. Fair enough?
Okay.
There's what the T account looks like for cash and for legal fees. Did we have to remember that the normal balance for that revenue account was on the credit side when cash was involved? We didn't. We just got the cash part correct. This is the one that I really want you to memorize, so you don't have to look this one up as you're working through the transactions. E, provided legal services on account. What accounts are affected?
Legal services.
Accounts receivable. And I think the account is called legal fees. You have to go back to the chart of accounts to see exactly what that account was called. What number did the revenue account start with? What number do expenses start with? Okay, good. Here's what the accounts look like. Accounts receivable is an asset, it went up. That's our debit. Legal fees is our revenue. It also went up. Where's the revenue's normal balance? On the credit side. F, September 1 to the 30th. Received $900 cash from clients for services rendered previously on account. Received $900. What accounts are affected? Cash and accounts receivable. What kind of a transaction is this going to be? A shift in assets. What happened to cash, debit or credit? Debit. Received. Received cash, a debit. What does accounts receivable have to be? The credit. There's what it's going to look like. They're both assets, so it is a shift in assets. And you can see cash is getting a little busy. We have 3 transactions there, plus the credit transaction of the $500. To put it, we need to add the debits and the credit side, subtract the credit from the debit side. And we should have a debit balance left. G, paid salaries expense, $700. What accounts are affected? Cash and salaries expense. We'd have to look at the chart of accounts to see the correct name for that account. Paid. What happened to cash? Credit. So what does the revenue or the salaries expense have to be? The debit. Here's what it looks like. Now, in double entry accounting, which one goes first? The debit. And when we start recording it in the journal, the debit's always going to go first. H, paid rent expense, $400. What accounts are affected? Cash and rent expense. Do we need to ask the C question? Can we go right down to the D question? Because cash was involved. What was cash? A credit. So what does our debit have to be? Where's the normal balance for expenses? on the debit side. Right, and look at cash, it's getting a little busy up there. Notice they're even changing the order of the T accounts because the debit should always go first. The debit's going to be the rent expense and cash is the credit. Received a bill for advertising expense to be paid next month. If we're not paying it now, we're going to pay it sometime in the future. What account does that go with? Accounts payable. And the other one is the other account? Advertising expense. Now this one might be a little tricky for us to do. The categories, advertising expense is an expense. Accounts payable is what kind of an account? A liability. Where is a liability's normal balance? On the credit side. Did the liability go up or down? Up. And that one might be a little tricky to do. Advertising expense is our debit. Accounts payable is our credit. But out of how many, this is the only one that was really complicated. Long withdrew cash from personal use. Withdrew cash. What did we do to cash? Debit or credit? Credit. And the account that goes with the withdrawal is called VID00001, withdrawals. That's what the T accounts look like. That's what your homework for chapter 2 will look like. So you need to write those down. Need to get all of those in there. Label them A, B, C, C, so you can go back and check them if you need to. Now we haven't footed those. Some of the problems don't ask you to foot them. I would foot them all just so you know what the ending balance is. Just foot them and make sure that your debits equal your credits on your transactions, just as a check. And then we're going to prepare a trial balance. With the trial balance, this is different from a balance sheet. The trial balance is going to list all of the accounts that are in the ledger. It's not divided like the balance sheet and the income statement. The trial balance just gives us a check to make sure that we recorded everything correctly. We'll take the ending balances for all of those T accounts. We'll list it on the trial balance. The trial balance has a specific date on it. It's not for a period ended. It's just for a specific date. Because an hour after we prepare the trial balance, the numbers could be different. They're listed in the same order as their account numbers appear in the chart of accounts. So here we have footed everything. We've subtracted the smaller number from the large number. Hopefully the balance is on the normal balance side for those accounts. Cash, the balance is on the left side, which is where its normal balance is. Accounts receivable, office equipment, those all look correct. Accounts payable, its normal balance is on the credit side, and we only had credit entries there. VID000 capital, we only had one. VID000 withdrawal, we only had one transaction. What kind of an account is the withdrawal account? Contra capital. Our revenue, we had 2 transactions. We didn't have to subtract anything there. Expenses, we had one for salaries expense, one for rent expense, and one for advertising expense. Taking all of those totals, we can put them in what's called a trial balance and make sure that the debits and credits equal. Notice they're not divided into balance sheet accounts or income statement accounts. They're all listed on here. The trial balance doesn't usually have a dollar sign on it, so the totals don't have a dollar sign when the first name in the column doesn't have a dollar sign. It's just a practice tool. It's just for us as a treasurer. From that trial balance, we can prepare prepare our financial statements. What financial statement do we prepare first? Income statement. And this is on your test. Which one do we do first? The income statement, it gives us our net income or our net loss. We can take those numbers directly from the trial balance. Then we'll prepare, which one comes next? Statement of owner's equity. And then the last one will prepare the balance sheet. On your balance sheet, you need to take the ending capital or the beginning capital for the next fiscal period from the statement of owner's equity. The income statement is first. What goes on the income statement, the ICE accounts, ICE, they're temporary. We're going to close them eventually. The statement of owner's equity will take the beginning capital, add the net income, or subtract the net loss, subtract the withdrawal, add the investment if we had an investment, gives us a new capital figure. And then the balance sheet. The ALP accounts, assets, liabilities for partnership, you have to use the new figure for the capital. Would anybody admit that their balance sheet didn't come out on their homework for chapter 1 because you didn't use the correct capital? I see some smiles, some of you probably didn't. If it doesn't balance, that's probably the mistake you made. You've got to go back and pick up that ending capital from the statement of owner's equity. From the trial balance, you can see the picture here where we've taken all of the numbers. That's all of our accounts. Income statement, statement of owner's equity, balance sheet. And we had a question at the very beginning about how do we make it look? Do we have blank lines in there? And we can. I want these two numbers to be on the same line, so you might need to skip some numbers. You've got plenty of space. Just make it look nice. Notice where the dollar signs are. The balance sheet has a specific date. And the way you do the forms is the name of the company, the name of the statement that you're doing, and then the date or the fiscal period. Here it was the month ended. And then there's our summary. That's at the back of the chapter. Do we have any questions? All right, we still have about 20 minutes left, 25 minutes. You can work on the accounting tutor. You need chapters 1 and 2 before we take the test. We'll do the demo problem next on Thursday. If you have paper or you have, what else did I ask you for? Oh, your workbook. If you have those, I'll take those from you today if you want to bring them up. Are you going to keep your workbook? Yes. And Ashley.
Every now and then I want to grab my highlighter. You go.
No. Oh well, you're going to say part over. This is like damn.
Okay.
Okay, anybody else with their paper or your workbook, the extra workbook that came with your book, you can turn that in. If you didn't bring it today, you can bring it next time. Yes. write the chapter number on there for me? It doesn't have a chapter number. Your name should be there. Okay, good. I know, it's heavy.
Yeah.
Okay, try to bring it up, let's see if we can do it. You won't have to allow pop-ups.
It's not there, so I'm trying to reset the password and I called and they said they had to ask for the school or something, where would I do that? Like they said that they don't have no authority.
Bring it up and let's see if we can change it.